Good morning from Chicago traders. Thanks for joining me here today on Wednesday, the 3rd of November, 2021. It's 8:01 a.m. Chicago time, coming at you from the Chicago Board of Trade building here at the Financial District. I want to remind you that derivatives trading is not suitable for all investors. Past performance is not necessarily indicative of future results. This is episode number 2108. We're going to jump right into the convergent trading pre-market summary sheet. A reminder that today is FOMC rate decision day. We'll have the rate decision, which is expected to be zero, a change of zero on the Fed funds rate at 2 p.m., but we're looking for the Fed's press conference at 2:30. The key driver on this meeting is that the expectation is the rate setting committee is to hold its benchmark interest rate at its current range of 0 to 0.25%, but predicts the Federal Open Market Committee will announce a reduction in the current $120 billion a month of asset purchases. The reduction is expected to be $15 billion a month, and that's $10 billion in treasuries and $5 billion in mortgage-backed securities, which that's what the expectation is. Outliers suggesting a cut to total bond purchases of as much as $30 billion a month. That's a summary by LiveSquawk. And so that's the big piece. So what is the event risk today? The FOMC decision. Oftentimes on days like today, it is a snoozer, as it's already been up till this just a couple moments ago. We only had about 8 to 8.75 points of range in the S&P. We just expanded it to 10 points. The other piece is China is having its largest COVID outbreak since the beginning of the pandemic, since Wuhan. And they're canceling flights, they're locking down, and that's expected to probably trickle down into the consumption of commodities. So we expect commodity prices to take a bit of a hit as factories and so on are likely to be locked down, which may further exacerbate the supply chain issues right into Christmas. So this is a big piece that we need to keep an eye on. It's getting some rumbles, but it's not front and center yet, but it may become front and center here over the next few days or weeks. ECB is not likely to increase rates next year. That was announced by the ECB president, Lagarde, and those are the key elements. Earnings, we had CVS Health, Humana, Exelon, CDW, Emerson Electric, Sunoco, and Marriott International, plus more this morning, many of them beating. Earnings continue to be strong. After the close, we're looking for MetLife, Allstate, Qualcomm, Booking.com, and Electronic Arts, plus a few more. That's what's on deck for today. Some of those are relatively big movers in the NASDAQ. So that's where that stands. Crude is taking a bit of a hit today as supplies appear to be increasing. We do have a crude oil inventory number today at 10:30 Eastern, and we'll see what the reaction is. But you can see today it's down 330 basis points off $2.77 as it makes its way back down to $80. We're at $81.18. So that's another piece to keep an eye on. Looking at the S&P, completely balanced overnight. Balance profile has extended just a hair a few minutes ago, but the overnight inventory is 96% below the prior settle. Prior settle is at 46.23.25, I believe, 46.23.25. 10 points of range, the point of control at 46.20. Yesterday, 46.20 had a ton of liquidity and a fair amount of trading there. 19.20, I believe 19 is actually the point of control yesterday. Let me double check that. 1875 was point of control. And we are basically hovering in this region. So not much to talk about in terms of the S&P today. And the big thing, of course, again, is to keep an eye on the ball, and the ball is the FOMC. Yesterday, let's enlarge this for clarity. Yesterday's Trader Bite set out to set an expectation that we are likely to test the 15 right off the open and then fail at the 15 turnover and potentially push into 97 to hold sideways. So we would end up with a higher high, new all-time high, but mainly sideways coming into the FOMC rate decision today. That did not happen. Scenario 2 took place mainly. Scenario 2, however, did not come down into or towards the 4600 yesterday. We opened at 4607, went to 4605.50. So we only got 6 points off the open on the test down, and then it was buyers and buyers and buyers and buyers. It was very slow grind up, but scenario 2 was looking for a pullback, which we got a tiny amount of, and then we're looking for a push towards 30. Yesterday's high, 27. Here's what actually happened in our review segment here. Here's yesterday, right there. Not much, right? Occupying about a third of the screen, very pretty tight range compared to Monday. What we did here is we pulled back. We opened right in there. We pushed to 10.50, pulled back to the 0550, and then once we took off, we started to use the mid, the RTH, not full session, mid and VWAP as a pullback test area. That's right there. That was the key trade right here. This pullback to 12, the prior high in confluence with the mid yesterday. Completely missed it. Was just, I'm allowing too many distractions, running businesses and doing other things while the market is grinding, and this is costing me in terms of getting on some solid trades. That's just completely my responsibility. But the first chance we had is a test of 4609 quarter. I did not take this trade here at 4609 quarter. Reason being, I was looking for the market to push new all-time highs in the RTH session, which it did, above 12. And I was looking for it to get tangled into the 15. So here it pushed into 1375. I expected it for it to get tangled into the 15 and roll over. And this looked like it was about to roll over. Let me expand that. Get rid of some of these lines here. And it looked like it was going to roll over there from 1375 to 09. It held the mid, and then we have this grind up. This is one of those days where you kind of block your nose and close your eyes and take a dive on the long side into new all-time highs. I know a couple people did at Convergent Trading. I was not one of them. And then the later opportunity was the pullback to the 12 here, right in confluence as discussed. And then we finally break the 19 IB to push to 27. And remember, the target was 30 up here. Pulls all the way back to mid and VWAP. Again, the same scenarios you have here for another pop, and 10 points. And then from there, it's just pretty much sideways. This, as you see here, looks like a ball kind of losing energy as it bounces and dribbles off the screen. So this is the energy was coming out of this thing into the close. The close was pretty quiet, pretty dead. There was not much action there. Coming into today as part of our review segment here, coming into today, this chart shows orange for the full session profile. So this is the full official session on the CME, 6 p.m. to 5 p.m. and the blue is the day session profile. And what we did is we dipped down, we pushed higher, and then we took off. And really, this was dragged up. The S&P was really dragged up by the NASDAQ. The NASDAQ went from a tight consolidation to just absolutely impulsive and vertical. And yesterday, if you saw my Twitter post, the transports, the Dow Jones Transport Index was hugely up, about almost 10%, with Avis coming in with much better than expected earnings, and the stock doubled yesterday. Amazing for a mature company. Hertz popped higher as well. Remember, Hertz was going into bankruptcy just a few months ago or whatever. Popped higher, and just the transport segment was really, really strong yesterday. Tesla was strong, and so on and so forth. So we ground up in the S&P. The trade was clearer in the NASDAQ, as far as I could tell. And then overnight, we have this lower high, we have this consolidation, this completely Gaussian balance profile with the point of control right on top of the mid. So now we have the mid, the overnight point of control, the mid, the overnight point of control, and the full session VWAP all in the same place. The market is below and is turning back up. We just extended down into 46.15. 15, if you recall, was a measured move level in a stock zone from earlier this week. 12 being the high from 2 days ago. So we pulled back to 15 here and are holding steady. We're opening in balance. Okay, so that's what I have for you. In terms of everything else, looking at the Edge Pro X overview screen here. Edge Pro X is my trading execution platform. You can get it at edgeprox.com. We're really doing okay in terms of the progression of price discovery upwards for the month. We're still not leaving the monthly VWAP behind, but let's be serious here. We've been here for 2 days, so we don't expect it. But we're trading on the positive side, or on the higher side of VWAP so far in the ES, YM, and Q. If you observed, if you recall, I talked about crude getting good separation from its monthly VWAP, and you can consider this an anchored VWAP. I'm just simply anchoring it at the open of the month, but crude moved away, and I talked about it last week that crude is expected to come down into its VWAP at 80, which it did. You could see it bounced off of the VWAP right there, and crude now is creating separation between its monthly VWAP. Again, caution as it's early in the month, it's the first week. Still, it's creating separation between its VWAP and what is below. Crude, to me, is turning bearish short term. You can see the lower high and now falling through. To me, the energy side is probably overdone and is likely to explore lower. What's the area that crude is expected to come into? Right here, the 75.76 below is expected to provide a little bit of support. We'll see what happens. This is a fundamental product. It is governed by supply and demand, and it is controlled by a cartel. So your guess is as good as mine. Gold is weaker. Silver is weaker. We saw these metals come off pretty strong. The bonds looking pretty strong. When the futures push higher, yields are lower. So the 30-year yield is down. It is flattening the curve. On the long side, the 10-year, same thing. We're getting decent separation on the 10-year, but that's all to be seen today. We'll see what happens today. This may actually see us falling off, but the Fed is going to do what it can to keep bond and treasury prices as high as possible. So that's where we stand. The currencies are below. I won't spend time on that. I would rather get into what's expected for today. Set up the chart. Here's the thing. We're coming into the FOMC, so I'm not going to sit here and draw lines. Um, I'm not going to sit here and draw lines currently, okay? Because it just makes no sense. So at some point in the session right here, we're going to get the FOMC. So FOMC, okay? So we're going to chop around. Remember, yesterday's point of control right here, the current overnight point of control right on top. The overnight session is completely balanced. We've got 12 below. We've got this 27, 26, 27 area above, which really shut off the buying last night. We went up to 25. So to me, like sitting here and drawing lines and stuff, it's just going to be a bunch of nonsense. What's important, however, what we want to track is what's above, and what's above is the 30 again, the 30, and then I have wide open space to 50 up top. I don't have any measured move projections into the 50. I don't like to go down to like a 30-minute to get fib extensions, to get measured moves. I think that's too short of a time frame for most people who are doing projections or doing Gartley patterns or whatever to be able to spot. So the key numbers are 30, 26, 27. So 26, 27. Below us, the 12. I could color in the 1950, but the stock zones, these gray bands that you see here, these stock zones are intended to be outline areas where I'm expecting the market to respond or to react. So these are areas to trade against in my plan. This is not a recommendation for you. This is how I'm looking at the day. It's my map for the day. So I don't put a stock zone in the middle here because I expect, given the balance into the close, given the balance overnight, I expect the market to just slosh through the 19, although the 19.5, 20 would have gotten one if we move away. I would add the 1920 as a 2-day point of control, or as a high and a point of control. That's going to be significant once we move away as a potential support or resistance level with a clear zipper or clear band to lean against on a first test. But right now is not the time to put a stock zone at the 20. So we have a lot of distance between these levels down here at 05, and then we get into the first vol of sigma and we get 97 again. You're hearing about the 97, so you've got the century figure, the 97, and then anything below there is likely to push us into 90 and 88. This is the map of what the ES is likely to respond to or react at. What it's going to do this morning is anybody's guess. I'm not going to throw lines on here. I'd just be making up some nonsense. So I'm not going to do that. But at some point we have the FOMC, and remember, the FOMC is not something we would recommend you trade. I don't think you should be trading off of the FOMC. The movement most likely is going to be at the press conference, and if you're someone who can interpret someone's, our buddy Jerome's words into prices, then go ahead and trade it. But for the rest of us mortals, we just simply wait and look for an impulse, a weak pullback and sell, or an impulse, a weak pullback to buy into the direction of the break. So that's really how FOMC should be traded. A three leg wave pattern is what I've always traded the FOMC at since 2002. Is it when I started trading futures? And so this is what I look for. So I'll relax into the the announcement, and don't commit too much this morning. It may move. We may get a good break from this bounce here before the FOMC, but it's not a day you would want to commit your entire risk or your daily loss limit before the news event occurs, okay? My expectations are tempered. It seems like the market already knows everything there is to know about the FOMC, so take that into account as you come in. Trade professionally and make sure you're following some process that you've developed for yourself rather than copying someone else's trades. Follow that process and just be professional about the way you manage risk. Risk comes first, okay? Good luck, and I'll catch you tomorrow morning.